The Bad Crypto Podcast is the show for the crypto curious and the crypto serious. We enjoy educating our listeners while entertaining them. If you're just getting started with cryptocurrency or blockchain, you'll find our listener starter kit at badco.in/basics. What kind of assets are there? Well, there's liquid assets, there's personal assets, there's goodwill assets, gold and silver assets, and there's smart assets. Well, that's us. And in the 21st century, now we've got crypto assets, and that's what this show is all about. First, we'll be joined by Kevin Seqniki, co-founder of AVA Labs. AVA is a platform for new assets, markets, and decentralized applications that aim to tackle some of the tough problems in the financial ecosystem and decentralized ledger platforms today. Then, we'll introduce you to Matthew Finlayson, head of product at Invictus Capital. They're a blockchain-based asset management business that he co-founded. And we're going to talk about Crypto 20. That's the first tokenized crypto asset index fund launched in 2017. Hey, we don't mean to be pain in the assets, but that's who we are. After all, we're Badassets. And this is episode number 333 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
Episode number 333 of the Bad Crypto Podcast. Welcome. I'm Joel Comm. That's Travis Wright.
I'm Travis Wright. That's true. And this is episode 333. That's one half of the devil.
Oh, so it's half a mark of a beast?
It's true. Well, if you times it by 2, that would equal your evil number. And so I guess we're just 2.5 years away from that episode. So keep waiting, guys.
Maybe it'll fall on Halloween or something like that. Yeah, we'll have to do the whole show with a deep... That sounds like Batman now. Episode 333. It's half the mark of the beast.
Now with even more evil.
Hello, gang. Welcome to the show. Got a great one for you today. 2 fantastic interviews as we talk about crypto assets. But first, we're going to give a shout out to our show sponsor, eToro. Talk about storing and trading your crypto assets. It's the smart trading platform. They're one of the largest trading platforms in the world. Over $1 trillion in trading volume on the platform per year. And now U.S. customers are flocking to the platform to use it because not only did they have low and transparent fees, but they've got a community of over 11 million other traders that are discussing trading charts, all things crypto, and Bad Crypto wants to give you $25 in Bitcoin for open. Yep, that's what I said. Did you not hear me?
$25 in Bitcoin.
For opening up a new eToro account that's for U.S. residents only. You got to find out how to do it. Go to badco.in/eToro. And now let's get to some asset talk.
Go looking at my assets.
We love getting crypto OGs on the show, and it's hard to get any OGer when you've got somebody that's been involved in cryptocurrency since 2010. He's a top crypto influencer. His name is Kevin Seqniki. He's co-founder and chief protocol architect at AVA Labs. That makes him the CPA, different kind of CPA. He was a PhD candidate in computer science at Cornell. He's done research in distributed systems, cryptography, security, as well as economics at Cornell and places like Microsoft. He founded an AI company alongside a peer that did hyperparameter optimization. I don't even know what the hell that is, but he's with AVA Labs now, avalabs.org. Kevin Seqniki, welcome to Bad Crypto.
Thank you guys for having me.
Well, what the hell is hyperparameter optimization?
That's a great question. So a lot of AI is all about really fitting a function to a bunch of data points and learning what the hell this data means. Hyperparameter optimization is just another fancy way of saying, I have a bunch of data. Please figure out what this function that fits this data is. So I can say, for example, things like, what is the optimal way to organize the shelves in my store to get the maximum exposure to my best-selling brands or, best-selling items in the store?
I see. I thought, hyperparameter optimization sounded like optimization that, had ADD, needed. It's optimizing. It can't stop.
Right. Exactly right.
Nice, Mr. Jocom. Always good to have a nice little jokey joke. Good stuff. So I'm curious, man. So you've been in this game for a long time, like since 2010. You've seen Bitcoin evolve over the last 9 years. So I think one of the biggest things right now, one of the biggest topics that we have been chatting about, and some of the things that concern us and our audience the most, is this new revelation that Google maybe has reached or has found the pathway to quantum superiority. What are your thoughts? Because you have PhD candidate in computing, you probably have greater insights on some of this than most. What are your thoughts on quantum computing and how it's going to impact the crypto space?
Yeah, it's a great question. So quantum supremacy is a bit of a loaded term, I would say. It sounds way cooler than it actually is, but it's still pretty cool. So what it really has impact in is in various problems that require searching through a space of many, many different possible options. So this turns out to be a great thing for problems in biology and chemistry, where, for example, you're trying to find out protein folding, trying to find new medicines for new types of, all types of diseases and so on. For crypto space, unfortunately, I will have to be the bearer of somewhat disappointing news. Nothing quite interesting for the crypto space. Crypto space, cryptography is really the types of algorithms here are not quite susceptible to any quantum attacks or rather any computers that we currently have the latest quantum algorithms for. So we're still in safe hands for at least for the time being.
We're still safe. Yeah, they were saying that maybe by 2022 that the quantum computers might be able to start busting that 256 hash algorithm, 256 SHA. Is that something that we need to be scared of or concerned about, or do you think that over time Bitcoin has evolved every time there was an issue, right? And so Bitcoin keeps evolving. I would assume Bitcoin is going to eventually become quantum resistant somehow.
Not quite. So the very interesting thing about the hash function in Bitcoin, or rather I would say the very interesting about Satoshi's mind, is that he was the kind of person where to him a single hash function was not sufficient. He had to double hash it. That's how paranoid he was. He was like, well, if the first one is broken, we'll do the second time, and that should add extra security to it. So if we do break SHA with a quantum computer in the next few years, it will require a full change to the hashing algorithm that Bitcoin uses. Frankly, I don't quite see that happening anytime soon, because I've heard, I've had peripheral exposure to quantum stuff for years now, and we've always been years from cracking these types of algorithms. So it just seems to move the needle down the court further and further. So I think we're safe for the next few years at least.
Whew, close call there. We dodged a bullet with Google and their quantum supremacism. I mean, that's and IBM took exception with their statement, saying that was just a specific piece of hardware created for one specific function, not a true computer that was able to crack that, right?
That's exactly right. Yes. A lot of these are custom made for very specific functions. And a true quantum computer, if we see one within the next 10 years, that will be quite revolutionary, and we'll be able to easily implement all kinds of algorithms, or rather cracking algorithms through it. But we're far from that technology.
So like fake news, quantum supremacy.
I wouldn't quite call it fake news, but slightly, exaggerated news.
Maybe less relevant news, perhaps,
right.
is how to position it. Because you say something like that, and it could be super scary. Oh no, the sky is falling; they're going to crack the Bitcoin blockchain. No, that's no.
The prices right after that sort of have tanked. It's gone down since.
Yeah.
So I wonder if that's had any impact.
I don't. I'm not sure that it has had the impact. I think it's a combination of various different internal political strifes within the Bitcoin community and people, selling off and so on. So I don't think it's related to that. I think Bitcoin is still strong in its position.
Why do people got to come in and ruin everything?
Exactly right.
So, Kevin, let's talk about what is particularly fascinating to you right now in the space. I'm wondering what has your eye?
I think a lot about value propositions for these kinds of technologies. So Bitcoin did something amazing to money itself, to currencies. It provided us a way that we could build currencies that do not necessarily require the backing of a government and its military. It's a new way to build, transfer of value, but Bitcoin is limited in what it can possibly do. And while it does currencies to some extent well, it's limited in how expressive this value can really be. And I'm really interested in if we can move the needle towards transfer of much more, exotic types of value, or even things that currently exist. Really, what I mean is digitization of all sorts of assets that are currently either being traded, such as equities and futures and so on, but even more excitingly, things that are currently very illiquid or just not traded at all. I see no reason why, as a world economy, we don't move to a place where everything is tradable. Anything that has representation that has ownership can be traded freely on peer-to-peer markets. That's really exciting to me.
Now that's really where sort of AVA Labs comes in, correct? Because you just mentioned the global financial markets are highly illiquid, and just a result of that, or a symptom of that, the U.S. Federal Reserve printed almost $100 billion recently because the banks aren't liquid. The cash flow is not flowing right now, and so there's some challenges there. And so we're now in quantitative easing number 4 now. So that is a problem. And how are there solutions? And maybe what does the AVA platform do, and why is that radically efficient and maybe different than what we're currently seeing out there with crypto blockchain projects and platforms?
Right. Great question. So I want to really, for example, emphasize just how illiquid things are in a sense. The Norwegian Oil Fund has about $1.3 trillion in assets. And that kind of money is incredibly hard to deploy. Even if you were to deploy it across all investable assets in the United States, that kind of money will single-handedly rise up the entire markets. And a lot of really smart people on Wall Street are being paid very large sums of money to solve this problem. So markets, there is really just a few types of things that we can really trade with high liquidity nowadays. And what we really want to go after is things like insurance, for example. Insurance is an incredibly, I would say, archaic model because everything is just handled through very archaic paperwork. Insurance contracts are not traded. They're just, there's a few layers of reinsurance that happens. But otherwise, the margins for insurance companies are incredibly high precisely because these markets are incredibly inefficient. Insurance markets today look like the airline industry of the 50s and 60s, where airlines were making a whole lot more per ticket in comparison to nowadays. And that's because finding and searching for these for airline tickets has become way, way cheaper, way more efficient, and you have way more options. So being able to create contracts that represent these sorts of, being able to create digital contracts equivalents to these archaic contracts like insurance is a really interesting venue for exploration that allows things like the Norwegian Oil Fund to deploy all that kind of capital. And what's sort of impossible to do with current platforms is that they are basically extra legal. This is a huge problem. Extra legal in the sense that if I were to deploy a ERC20 on Ethereum that represents some sort of insurance contract, let's suppose crop insurance, I have no ability to define any sort of legal contracts with any of the entities that I'm participating in. It's just a sort of lowest common denominator, best effort service by the entire set of validators in Ethereum. And this is not really how you build systems like this. Really what we're envisioning is sort of a redesign of this ecosystem where you have the ability to define your own networks within the larger network of decentralized applications or decentralized networks. And your own network, you have sort of full customizability ability in it. You can fully hack it to your desired specification. You can set up legal contracts with the entities that are managing your assets. You can establish covenants that describe where this asset can be traded and so on. So now it allows very clearly existing entities that do trade contracts in regulated environments to move to this new system where things are standardized, things are much more efficient, and yet they live within the legal framework that we currently know.
As you're talking about smart contracts, what comes to mind is all the various ERC-20 projects and others that are built on smart contracts. And there's two different schools of thought here, that they're all coins and that we don't need utility like this on blockchain. And then we have others that are like, there's going to be 1 million different tokens for all kinds of applications that are going to help to make those systems work better. Where do you stand on that?
So it's definitely the case that there are a lot of coins, but I would say that it's a reductive term to say that everything is a coin out there. It is lots of really great teams that are not us, plenty of others, very smart people are working really diligently to actually transfer value that we currently have in more archaic forms into ERC-20s. But the platform that these sit on right now makes it really complicated. For example, from a legal perspective, it's just a whole lot of hurdles that you have to go through. And it actually might just not be technologically feasible, since everybody has the ability to manage these ERC-20s. And that's not really how you create things that are regulated and of high value. So I see a world where, really it's exciting to be able to create fractional ownership of basically everything. And there is a need for that. Like I can create, and I should be able to create fractional ownership of some real estate or of an insurance product, like for example, crop insurance. This is a really exciting one that doesn't exist. I can, for example, as a farmer, create or rather pay a premium to a contract pool, which represents a large set of land and the payouts to this large set of land. And now anybody can come in and bid for ownership of this insurance pool. No such thing currently exists. Everything is opaque, super slow, managed by paperwork. And this extends to much more than just insurance, crop insurance, even titles, for example. And there's a whole lot of other types of assets that exist right now. They're just not tradable. So, when people say, oh, there's going to be a lot of tokens, yes, as long as these tokens really do represent things of value, then it's perfectly fine to have such a collection of tokens. But if you just say everybody comes in and creates their own currency, then there isn't really any value here. And this has kind of been the case up to now, where these 2,000 plus coins that we see, they're really just undifferentiated, tokens that they have no value to the real world. They're just a bunch of marketing and memes behind them to try to create, some value around their network. But there's nothing differentiated about them. So they look identical to each other. So yes, those are the really valueless ones. But being able to create a large array of tokens that represent really valuable things, I think this is where we need to move as an economy.
So that's very interesting. So tell us about the team then, because a lot of times, there's these companies that are building really cool stuff, but like maybe they don't have the chops, the development chops, or the knowledge to be able to do that. Now we've heard about your background and some of the things that you've done, but tell us a little bit about the rest of the team. Like what makes you guys the right people, or you folks over there the right people to execute on this?
Yeah, great question. So the founding team, it's composed of 3 members. So I introduced myself already as the other 2 folks. One of them is Professor Amit Gunsir of Cornell. He actually created one of the very first proof of work cryptocurrencies before even Satoshi. It wasn't quite Bitcoin. It was called Karma back in 2003. So he's been in the space for far long. He's also the creator of or writer of the selfish mining paper, which is the second most cited paper besides the Bitcoin white paper in the space. And very influential person in the space, I would say he has probably had an impact in almost every single interesting development in the crypto space, from smart contracts to selfish mining, of course, to a lot of other things. And the third person, co-founder of the company, Ted Yin, who's a fellow PhD student with me at Cornell. He is the author of the Hot Stuff, or the first author of the Hot Stuff consensus protocol, which is currently used by Facebook Libra. So from a technical perspective, just the founding team is fairly stacked. But we're also very pragmatic. So we really care about building things that actually have real value. So while we are also sort of crypto OGs to some extent, we have a healthy dose of skepticism, and we really focus on things that have real value. And the rest of the team, of course, is just absolutely stacked. We have some amazing hackers, guys that would blow an entire engineering team single-handedly by themselves. It's a fantastic team, and we're pragmatic in how we do. And I think we'll do something exciting.
You've got a demo of your platform at avalabs.org, and I clicked it, and I kind of feel like I'm playing Minesweeper. Like, what am I looking at here? What is this?
That's a great one. Yes, so Ted actually made that one, and it's actually a simulation, real simulation, and actual implementation in the back end of one of the core primitives of the consensus protocol. So at a very high level, what we actually build as part of our engine is something that has been developed internally, and it's what I'll call the third family of consensus protocols. There's really been three of them, and this is the third groundbreaking one. The first two, of course, the first one is Bitcoin, which goes by usually Nakamoto consensus. The second one is what I'll call classical consensus protocols. These have existed since the 70s and 80s. They're voting based, so you vote on proposals, and it's really what the latest slew of sort of proof of stake systems are based on, like Tendermint, Cosmos, and so on. And then there's a third family, which is the Avalanche family, which is a fundamentally new approach, and it has this really interesting property. So let me give you only one thing that if you were to take away with you, it should be this one. It scales independent of the network size. So it does not matter whether the network is 100 nodes or 1,000 nodes or 10 million nodes, the performance will be the same. So it's a really neat property to have if you want to build really decentralized consensus protocols.
Okay, I think you blew our mind sufficiently.
Yeah, so I still feel like I'm playing Minesweeper. So it's called the Snow BFT demo, and you kind of randomize the square colors, and then I'm running this thing, and the goal is to prevent them from going to a single color.
Exactly right. So you can try to, as hard as you possibly can, you can try to get the network to be, once the network goes, let's say, to orange, you want to try to revert it to all blue. You'll see that it's really, really hard to do that. And of course, this is on sort of an easy setting to allow you to even get a chance to do it. In real implementation, it would be in hard setting, so this is very secure against super powerful Byzantine adversaries. So that's sort of the game this is simulating. It's simulating the ability you as an adversary to get the network to flip to the other side, which really represents a double spend. So let's say that the color blue means Alice space Bob. Can you, as the adversary, get the network to flip to all orange, which represents Alice space, let's say, Charlie?
The only way you guys are going to grasp this is if you go to the website. Of course, in the show notes, you could find this, but also if you go to AVA Labs, AVALABS.org, and then just click the demo there on the front page, and you could be as confused as me easily.
Hopefully not.
That's great. So what's next for you guys over there?
Lots of things. So we are actually looking to, we're working hard towards the public testnet. But before even that, we have this interesting ability that very few other blockchains, actually to my knowledge, no other blockchain has. But we have this really nice ability to just fully hack the blockchain itself, which means that I can launch, for example, a subnetwork within AVA that is just a direct clone of Ethereum. It works the same exact way. It looks identical to Ethereum, except that it's way, way faster, way lower latencies, way higher throughput. Or if I don't want that, I can maybe even make a direct clone of Bitcoin. And I can run both of them as either proof of stake only or proof of work as well. So it's fully customizable. You can define really anything that you want. And we have this already sort of developed. And so what we're looking to do for the next immediate phase is to onboard some of these networks and just say, look, we have Bitcoin, we have Ethereum implemented internal within the AVA network, running the consensus protocol that we have. It looks identical to you. You have the entire Bitcoin and Ethereum state, yet you're able to transact at thousands of transactions per second and confirm it in a matter of seconds.
That's amazing. Great stuff.
Indeed.
All right, Kevin. Well, clearly you are above my pay grade, and that's because I'm not getting paid anything really. But we do appreciate you coming on and sharing what you're working on, and what's Bitcoin going to be at December 31st, 2020.
That's a great one. We will have to discover. I think Bitcoin will chug along as it currently is. It is a system that has been tried and true. I don't think it's going anywhere. But hopefully we do see some better technology coming along in the next immediate future.
Great way to avoid the price prediction too, by the way. I like that.
He sidestepped it like a pro. That was a total good.
Well, yeah. I usually don't want to comment on prices.
Thanks, Kevin. We appreciate it.
Oh, this was fantastic. Thank you guys so much.
Mr. Travis Wright, this show attracts some super smart people, and I don't know why. Maybe it's because smart people like to be around people dumber than themselves, and they know that if they come here, that's a shoo-in.
Actually, people like to be around people smarter than them. That way, it's never good to be the smartest person in the room. You want to be around other people who are smarter, so you can learn from them, right? It's never fun to be the smartest guy in the room, which is how you feel every day, Mr. Joel Comm.
I never feel like the smartest person in the room ever. I just, especially in this industry, when we started the show, we didn't know Jack. Now we know Jack, but we don't know much about him. And the people that we have on are always smarter than us. And it's great because I'm always learning.
Always learning. That's great stuff. And somebody else who we recently met that was freaking awesome. We met Brandon, who is the CEO of MobiPay, when we were at that event in Bali. And you know what? Their project is really cool. Now they're a sponsor of the show, and money has existed seriously for thousands of years in various different forms, progressing from those cowrie shells to precious metals to minted coins to paper money to plastic cards, right? But the transfer of modern money is slow and expensive for both the merchants and the consumers, and well, especially if you're going across borders. Well, payments are becoming more and more increasingly mobile. And that's why MobiPay, MobiEPAY.io, why their ecosystem consists of 3 core applications that let users spend and send money, digital currency worldwide from their mobile phone in seconds, even if they don't have a bank account. It also supports cashback programs on purchases with MobiCoin. And it has this real global retail marketplace where everybody in the Mobi ecosystem can win. So they have this nice rewarding loyalty program as well. So go check it out. You're going to hear more and more about it. We think this could be one of those platforms that increases the mass adoption around the world. MobiPay, MobiEPAY.io.
Fantastic. And we are not financial advisors, but we are advisors with MobiPay.
That's true.
But we don't advise them financially. We advise them on
marketizally.
All that good stuff. Okay, speaking of good stuff, got another great interview for you. This guy, Matt Finlayson, is the head of product at Invictus Capital. They created the Crypto 20 fund. It's the first tokenized crypto asset index fund launched in 2017. So let's do this. Blockchain, so very disruptive. It is, and part of the financial sector that it's disrupting is the asset management industry. And with us today, we have the head of product at Invictus Capital. They're a blockchain-based asset management group co-founded by Matthew Finlayson. I can't, damn it. Why can't I get your name right? Finlayson. Right, Matt?
That's correct.
Nailed it on the 5th try. Welcome to Bad Crypto, sir.
Hey, guys. Nice to be here.
Finlayson. There, I got it now.
Yeah.
We're going to leave that in, though, because I like when mistakes are in there. We're glad you're here. You are the blockchain engineer responsible for all the blockchain-related work needed for Crypto 20. It's the first tokenized crypto asset index fund that was launched in 2017. And also, you've got an honors degree in mechatronics engineering. Is that how you pronounce that?
Yeah, that's correct. It's robotic engineering, basically.
I'm just going to call you Mechatronic Finlayson at the University of Cape Town. And you've got a background in data science and finance. And that was a good one. Yeah, Trev?
That was not bad. You finally had a funny joke. That's good.
Yeah. Mechatronic Finlayson.
So before we get into this, maybe tell us a little bit about Invictus Capital and what you guys are trying to accomplish over there?
Sure. So, as you guys mentioned, Crypto 20 was the first fund we've launched back in 2017. And, it was kind of addressing the market need of looking to gain exposure to crypto assets. And that was a pretty big success. And we raised $40 million to seed the fund, and it's been running ever since. And basically off the back of that, we launched Invictus Capital as kind of an umbrella company under which we can launch additional funds. And the main product that we have is an asset management platform that we've built out to service our funds. And this is very much a blockchain-based asset management platform. And it's what we've used to launch the 4 funds we have to date. Everything from crypto index funds to margin lending interest earning funds to we even have a venture capital fund, and property and some other exciting stuff are on the horizon. And basically what we're aiming to do is be the next evolution of asset management. Similar to what N26 and Revolut have done to banking, we're looking to do to asset management in general using blockchain tech. As we find that it's an industry rife for disruption, or ready for disruption, rather.
Yeah, we're going to disrupt all the things. I haven't looked it up yet, but obviously Invictus is a Latin word. What does it mean?
I don't know if it is a Latin word, to be honest.
Really? It sounds like a Latin word. All right, we're going to do some Googling on the fly right here. Invictus is a short Victorian poem by the English poet William Ernest Henley. It was written in 1875, published in 1888 in his first book of poems, book of verses, in the section Life and Death. Okay, so now we know what Invictus is, and we will have a link to the Wikipedia, which is invariably accurate because, Wikipedia always is accurate in the show notes. So tell us, who is this your asset management platform for?
Sure. So at the moment, the vast majority of our users are normal everyday investors, I guess. And we've got 15,000 people invested in our funds from across the globe. And that's across the 4 funds we have, which are, as I said, crypto index funds. Basically, we're looking to launch we're an alternative asset management platform. So alternative investments are our forte. So, more interesting types than the bland S&P 500 types of investments people get access to. I'd say our products are mainly for discerning investors looking for an alternative allocation as part of their investment portfolio. And additionally, we're increasingly moving into the more traditional management space where asset managers themselves would use our platform to launch their own funds. And we've got a few partnerships in the pipeline to launch other people's funds on our platform. And that's the end goal, basically, to be a platform upon which funds can be launched that have all the benefits of blockchain tech, as well as being for the benefit of the end investor who now has access to very interesting, cool fund types that are much more transparently and cost effectively run.
So would you say that you're kind of creating maybe sort of a blockchain platform to launch things like the S&P 500 and other types of funds? Is that the main goal?
So potentially, as I've said, our focus is definitely on alternative investment offerings. So margin lending, venture capital, property funds, those kind of more interesting fund types, of which crypto is a good example. But the platform itself is pretty agnostic to what kind of fund you can run on it. It just replaces the traditional processes that are, very inefficient and, have a very high friction. And theoretically, you could run an S&P 500 on it. Our current plans are to focus on alternative assets, though.
Okay, that's nice. So we can maybe create our own bad crypto fund, let's just say, and every crypto project that's ever been on our show, we could put them in a fund and call it the Bad Crypto 300 or whatever it is, and then that could be an ongoing sort of thing. We could, is that what you're saying? We can basically, people can create their own funds.
Absolutely. So that could happen with you. If you did have a bad crypto fund, it would be able to be run on our platform. At the moment, we're using our own funds on the platform, and we're only opening it up to select few partnerships. But if you had very good motivations for why your fund would be wildly successful or was a good product, we could definitely have a discussion around that.
We don't have good motivations.
We should have the bad coin fund, but then you lost there at the last part, so there won't be a bad coin fund.
Well, we want to call it bad assets, and these are like just the shittiest ones that we can find. We want to put them in a fund, and that's badass.
Well, you would just short that fund.
We could just
right?
do the opposite of what you guys wanted to do.
Yeah, that's usually a winning strategy no matter what we do.
That's good.
Yeah. I'm looking at the light paper for Crypto 10 that is linked here in the show notes. So what is this? I'm looking at some complicated algorithms here for this hedge fund.
Sure. So the Crypto 10 hedged fund is a passive index fund with a unique twist that protects investor capital. And I should explain kind of the approach to take to all the funds we've launched on our platform that we manage ourselves is very much one of a data science scientific process. And you'll see the light paper outlines the approach we take to determining the fund parameters. So in the case of Crypto 10 hedged, what we're optimizing for is return versus risk, basically. And the fund consists of two parts. One is a top 10 crypto assets that are capped at 15% each. And the other part is a cash component of the fund. And then we have an algorithm that's predetermined by our back tests. And back tests are when you basically simulate a whole bunch of different fund parameters through lots of different time series of pricing data. And you come out with a fund strategy that's in line with what you're looking for. And so these back tests show that the top 10 capped at 15% with a cash allocation strategy that allocates some cash from the crypto to the cash part when the market's going down and the reverse when the markets are going up. And in that way, it hedges out negative market movement with the ultimate goal basically of preserving capital in times of declining markets or downward trending markets while still having good exposure to the top 10 cryptos throughout, and especially when markets are on the increase again, less capital is allocated to cash and more of it's allocated to the crypto.
So much math. I mean, who's the genius, the rocket scientist over there that comes up with this formula? And how do you know that this formula is going to stand the test of time? It looks like a bunch of letters and symbols to me.
Sure. So I mean, despite us being a fintech company, at least half of the people working at Invictus, myself included, all have engineering or data science or scientific backgrounds. So it's very much a collective effort, and we've got our own in-house data science team that does a lot of this kind of analysis work for us. And it's a very good question asking about what makes us be sure that this is what's going to happen in the future. And the honest answer is that nobody can predict the future, and despite many very prominent crypto persons always making claims about what's going to happen in the future, at the end of the day nobody knows. So all we can do is make a very educated guess based on what has happened in the past and what we think is likely to happen going forward. So you do take some assumptions, I guess, is what I'm saying, in coming up with the fund constructs using a data science methodology. But generally, that is substantially better than how it is done in traditional finance, where there isn't any kind of underlying research approach to creating a fund. A lot of it is more of a thumb suck. And certainly when it comes to actively managed funds, that is even more the case where it's a single person or a team of people deciding what to buy or what to invest in. Our approach is just to come up with passive rule sets that we think are likely to work based on the thorough analysis we've done. But once that rule set is determined, no one revises it unless the fundamentals of the data set have changed. So no one's making decisions to buy this or buy that. And that allows our funds to be way more efficient than their active counterparts.
So basically what happens is if somebody who's listening wanted to invest in your Crypto 10 fund, basically we just put some money in there and you guys are managing all that with your algorithms and your fancy maths, right?
Sure. And I don't want to
put money in and say boom and then kind of set it and forget it. Is that kind of what happens? I throw $1,000 in the fund and let you guys work your magic.
So that's what we're aiming to do. And if you look at traditional markets, the advice is always to invest in a passive index product and then just leave and forget it. And we have done the same for the crypto space, where we want simple investment products for our end users that they can just buy in once and then basically forget about it, and the fund will operate itself in accordance with whatever its mandate is. And I should point out, we also obviously offer funds in addition to just pure crypto exposed fund.
Okay, that's great. Now tell us how the margin lending fund works, because I don't know that a lot of people maybe really understand margin, how that works for them, and shorting and all that other stuff. Are all of those things available within your fund and your platform?
Sure. So the way our platform works, right? I mean, you can sign up, create an account, you go through our KYC process, and then you simply choose which fund it is that you want to invest in. And because our funds are blockchain based, all of that's kind of transparently viewable on the Ethereum blockchain, and you'll get your own crypto token, which represents your share of the underlying funds. And we offer, pretty unique liquidity functionality where you're able to exit the fund within an hour or within a day, depending on the particular fund. To explain how the margin lending fund works specifically, you kind of have to look at, what margin lending is. And it's definitely an area within the crypto economy that's been growing massively over the past year. And what margin lending allows for is, trading on margin lending exchanges. So the way the fund would work is that we would take the accumulated dollars contributed by investors into the fund, and we would put those dollars up to be lent out on crypto margin lending exchanges, such as Liquid or Binance or Bitfinex is a very popular one as well. Traders then take the loans, those dollar loans, and pay interest on those dollar loans. And those dollar loans are what provides them with leverage to do their trading. And the exchange manages the risk of those traders becoming unprofitable and automatically repaying their loans and all of that. So from the fund's perspective, we're loaning dollars out to individual peer-to-peer, basically individuals all around the world using these margin lending platforms. And in return for loaning out these dollar-based assets or dollars themselves, we get generally very high interest rates on the amounts that are being lent out. And traditionally, these kind of interest rates and margin lending, in general, has only been accessible to very big institutional investors or institutional players. So this is really the first time that individuals can gain access to these kinds of large interest rates. And in us managing that fund, we're aiming to capture as high an interest rate as possible to get those kind of stable returns for our investors. And at the moment, our interest return to date has been in the region of 11% per annum, which is crazy when you compare it to the likes of Robinhood's high interest yield account, which gives 2% per annum, or many banks which give 0.01% per annum on dollars.
Yeah, we like high interest rates. That's cool. Well, Matt, we appreciate the info. As we close out, let's project to the future. Do you see massive competition in this space? And I'm glad that you guys are early to the game, or is this going to be a very selective type of niche market?
No, I think there's definitely going to be, I wouldn't say necessarily competition at this stage, given that the adoption of blockchain tech is still relatively early. But the potential for the application of this kind of technology, especially to asset management, is massive. And I totally expect to see more things being tokenized, or more companies listing equity in token forms, as well as platforms such as ourselves that make use of this new technology to kind of change the way that things have traditionally been done. And I say that just because what we've seen over the 2 years of us, running, is that the operational efficiencies and improvements in process we have using this kind of technology compared to traditional asset management is really unbelievable. And you're really not able to tap into these gains without making use of blockchain tech, or you're not able to disintermediate the industry to the same extent without using this technology. So for sure, we think adoption is going to only increase. And we feel pretty comfortable, as you said, being an early player in the space with the head start we've gotten, the experience we've gained over the past 2 years. We only expect more and more people to come on board, and more asset managers becoming interested in the technology that we use.
Oh, that's great. I have a question then about your team. So you got Daniel Schwarzkopf and Luke Schwarzkopf, who are two also co-founders. Are they related to the Storm and Norman General Schwarzkopf?
I don't believe so. I can follow
like
up
a
with
famous U.S. United States Army general.
Desert Storm reference there.
Yeah, you don't always see too many Schwarzkopfs out there. So
no, you don't. I'm pretty sure they're not related to the U.S. general, though.
What about Arnold Schwarzenegger? Are they related to him?
Oh my gosh!
I don't think that's true either.
Or the Schwartzes, or the Schwartzes. I don't know.
They probably do use the Schwartz. If the Schwartz be with you.
You're a co-founder. Did you name it Invictus, or was that your partner that named it? Because you didn't seem to know if it was Latin or not. And I'm wondering if he said, we're going to call it Invictus.
I'm definitely going to get a lot of flack for having to Google the origin of the word Invictus.
I know why now. I've read the poem, and in fact, we're going to do it.
It stems from the poem, though. It's a very cool poem. I definitely recommend that you read it.
We're going to do a poetry reading right now. I'm going to read it right now.
I love it.
Go.
In your best poetry voice.
Yeah. Gather round, children, for a poem. This is Invictus by William Ernest Henley. Out of the night that covers me, black as the pit from pole to pole, I thank whatever gods may be for my unconquerable soul. In the fell clutch of circumstance, I have not winced nor cried aloud. Under the bludgeonings of chance, my head is bloody, but unbowed. Beyond this place of wrath and tears looms but the horror of the shade, and yet the menace of the years finds and shall find me unafraid. It matters not how straight the gate, how charged with punishments the scroll. I am the master of my fate. I am the captain of my soul. So there you go.
My captain, my captain. Very nice.
Yeah, captain of the soul. This is, so somebody investing in Invictus feels like they've got control of their density and their destiny. All those things.
So great. Very fascinating. I think this is interesting to keep an eye on. And, you guys are creating this platform that, are hoping to, revolutionize asset management. And you guys are what? You guys are available in how many countries?
Globally, everywhere except the US, Cayman Islands, and South Africa.
Nice. That's great. Everywhere except America. Great job, America.
Yeah, sorry about that.
Most excellent. Matt Mechatronic Finlayson. The dude whose last name starts with F. InvictusCapital.com is the site. Thanks, Matt.
Thanks for having me, guys.
Told you guys, when I say we got great content for you, it's because we mean it. We like to deliver the best, and we have a ton of really good stuff coming your way. We recently interviewed Miko Matsumura from Evercoin once again, and he's going to be joining us. We've got, let's see, who do we have here? We've got Samantha Radokia coming up in the show, wrote that great book about Bitcoin pizza. We're going to be going live in the Crypto Coin Trader group for our next bad news episode. That's going to take place on Thursday, and much more content to come your way.
Very exciting. Yeah, you know what? We've had a lot of opportunities to chat with amazing people, and more amazing people keep wanting to talk with us. So it's a surprise that people like to talk with us since we're so bad.
Now, speaking of bad, great segue to bad coin. We have a bad coin update for you all. If you held bad coin on BitShares and you haven't done your coin swap to the new bad chain yet, then you better hurry up and do it. December 31st, 2019, you will no longer be able to swap your bad coin from the BitShares platform to the new Badcoin chain. Go to badcoin.net and click on the swap. Now, if you don't have your BitShares key, we can't help you. If you've lost your keys, that's down with you. But if you're able to swap them out and get the new Badcoin, then this is your warning. This is the 2-minute warning, even though it's more like a 2-month warning.
Well, it's actually
do it.
That's right, BitShares. You need to listen. And we're just gonna close that loop right there. And we've had a lot. I think a vast majority of folks have gone through and they've swapped their bad coin. If you've not done it yet, you're just a procrastinator. And if you procrastinate past December 31st, we're just gonna laugh at you.
I'm just going to laugh at you, Travis.
Okay.
Can you be the proxy person I laugh at? I don't want to laugh at our listeners.
I'm going to laugh at whoever messaged us on June or July or January or any month that starts with J in 2020 and says, "Hey, I forgot to swap my bad coin." And we said, "Oh, you only had 8 months to do it."
Yeah, but you can go mine it, right? We've got hundreds of people that are mining Badcoin. If you can't mine Bitcoin, and most of you can because you don't have the gear for it, I know I don't, then go mine Badcoin. Go to badcoin.net, follow the easy instructions to download a wallet and set up a miner. And if you've got your PC or your Mac, whatever's sitting around, the older the better. And go try it. You'll find that it's fun. And when you start seeing Badcoin come into your wallet, you'll be like, damn, I'm mining the cryptos.
Mm-hmm. Yeah, it's pretty cool. And we have another development. There's a group that's helping us with the foundation, which It's not going to be called a foundation, Mr. Joel Comm. It is the.
What's it going to be
It's
called?
going to be called the Badcoin Asset Development Association. Badass.
Which is perfect. We're going to have the best foundation in the world. It's going to be badass, helping all of you to stay bad.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.